didn't get me.
Toronto real estate is changing again.
Welcome to Real Sticks Guy, where the stuff you never learned finally makes sense. Real tips, real talk, and a whole lot of laughs because learning should never be boring. Let's get started. You walk into an open house. It's quiet. No shoes at the door. No couples giggling over countertops. No kids tugging on mom's sleeve asking where the bathroom is. Just you. And one very available real estate agent offering you coffee that's been sitting in a thermal carafe since 9 a.m.
If you've been waiting for the Toronto real estate market to crash, it's finally happening right now.
Welcome to the 2025 Ontario housing market, where things aren't just cooling down, they're starting to get weird. See, the headlines say prices are falling, but here's the thing nobody breaks down. It's not really about prices. Not yet. What's falling the fastest? Confidence, momentum, urgency, and in a market that used to be a frenzy of blind bidding and FOMO, that's a massive shift.
Hey, you know, it's quietly.
And what does that mean for you, whether you're buying, selling, investing, or just watching like it's real-life Netflix? Honestly, it means opportunity, but also risk. So let's dig into the facts in normal people language. No charts or econ lectures. You've probably seen the headline by now. GTA market down 23%. Sounds intense, like the sky is falling, right? But here's the reality. That number isn't about home prices. It's about activity, sales volume, the number of transactions. So yeah, the market is down, but not in the way people think. Last April, 7,300 homes changed hands across the GTA. This April, 5,600. That's your 23% drop.
What are you doing? What are you doing?
Nothing. Me? Just hanging around.
Fewer people are buying. Fewer sellers are getting what they want. The game is slower. But that doesn't mean the pieces have stopped moving. So what about price? On the surface, prices have only dipped about 4%. Not exactly earth-shattering, but that number smooths over the bumps. Condos, they're down closer to 7%. Some spots, like Oakville, are seeing 10% drops or more. Other areas are weirdly flat. It's uneven. And that's important because where there's inconsistency, there's leverage. And in 2025, leverage is rare but powerful. Let's talk about something most casual buyers have never heard of: the sales to new listings ratio. SNLR, if you want to sound smart. All it really means is this: for every 10 homes listed for sale, how many actually get sold? It's a way of measuring the market's heat or lack of it. Above 60%, that's a seller's market. Think bidding wars, panic offers, sellers calling the shots. Below 40, that's buyer territory. And my friend, we are way below 40. Right now, Ontario's SNLR is sitting around 36%. That means more than 6 out of 10 homes that hit the market are just sitting there. Not selling, not getting action, just waiting. And in certain pockets, it's worse. Oakville sitting at 33%. Brampton, 31%. Toronto Central, also 31%. King, 26%. That's brutal. It means for every 4 homeowners putting a property up for sale, only 1 is walking away with a deal.
Holy cow. Maybe there's gang activity here. That's crazy.
That's not just numbers. That's negotiation fuel. So what's driving this buyer's market? Let's follow the cash. The homes that are gathering dust? They're not dumps. They're the expensive ones. The ones listed over $1 million. It's not that they're overpriced. It's that most people just can't touch them right now. Mortgage rates are still high. Economic nerves are frayed. And nobody wants to borrow to the edge for a home that might lose value next quarter. So high-end homes are stacking up like unsold Teslas.
Yeah, so this is my condo. Wow, I love it. It's so cozy. It looks really cool from the outside, and the view is pretty nice. So how much did this cost you? $1 million.
Meanwhile, buyers, especially first-timers, are laser-focused on a certain category. Under $1 million, good neighborhood, clean enough to move in without needing a full HGTV crew. But here's where the next trap shows up: the pretty house problem. You know the one. Perfect photos, bright white kitchen, open concept everything, staged to absolute perfection, a vase of fake tulips, a candle that smells like cookies, maybe even a quote on the wall. Live, laugh, love. It's charming, Instagram ready, and it's bait. Because guess what? Everyone else scrolling through Realtor.ca loves it too. Even in this market, even with headlines screaming about a crash, those glossy listings are pulling in 18 to 20 offers.
House update, did we get her? So to update everyone, we've been trying to buy a house. Yesterday we got pre-approved for our mortgage, and on that same day we submitted an offer for a house. And did we get her? No, unfortunately we did not. There were 17 bids on the house. This was the house that we bid on. Listed at 1.1, it went for 155.
People still lose their minds over a well-lit kitchen, and the sellers know it. Meanwhile, down the street is a nearly identical home. Same bones, same size, same location. But the photos? Meh. The floors need sanding. The walls are beige. The light bulbs are the wrong color temperature. And there's a laundry basket in the corner. That place? Crickets. But here's the deal, and it's a big one. That less than perfect house? It might be listed for $100,000 less. Because perception is everything. And in 2025, perception is your secret weapon. The savvy buyer isn't chasing Pinterest. They're finding the listings no one's swiping on. The homes that need work, not gut renos, just elbow grease, maybe some paint, maybe a kitchen upgrade over time. Something livable now, transformable later. That's where the value lives. And if you're thinking about flipping, slow down. This market is not made for quick flips. Not unless you're sitting on cash and love gambling. Prices aren't moving fast enough to create margin. And buyers are too cautious to overpay for lipstick on a pig rehab. Flipping right now is like playing poker with see-through cards. Instead, zoom out. Because the long-term math? Still tight, still solid. Ontario's housing market is structurally underbuilt. Of the 240,000 homes started last year, only 42,000 were detached or single-family. Everything else? Condos and high-rises. So if you're dreaming of a backyard, good luck.
I mean, what if I don't want to live the way you live?
Oh, don't be ridiculous, Andrea. Everybody wants this.
Families are still competing for a shrinking share of land. And unless we start massively rethinking how we build, that squeeze isn't going anywhere. So what do? If you're a buyer, especially a first-timer, this could be the best shot you'll get in years. But here's the checklist. Only move forward if you're staying put for at least 5 years. You've got wiggle room in your budget. You're not relying on appreciation to bail you out. You're cool with imperfections and patient renovations. Because this market doesn't reward flash. It rewards clarity. It rewards discipline. It rewards the folks who don't panic, don't chase, and don't believe every clickbait headline. Want an edge? Look for these signs. Stale listings with over 30 days on market. Homes where sellers already dropped the price once. Listings with bad photos, weird paint, or as-is tags. Units that need updates, but not structural work. And always get an inspection. You're not buying a mood board. You're buying a structure. Bottom line, prices are down, but only in pockets. Buyer power is real, but only if you ask for it. Ugly homes are where the real money is. Flippers are out, and that's a good thing. The window is open for now. So take a breath, do your homework, and don't let granite countertops distract you from what really matters. Stick around in the next video. I'll show you how to tell if a listing is hiding expensive problems before you even book a showing. And if this helped you out even a little, toss me a like or leave a comment with the city you're watching. I read every one. Catch you in the next one.